you're holding me real tight. If I had a choice, I would choose you every time. Yeah, I don't know how to breathe without you by my side. You know me well, know me well. You know that I can never leave your side, leave your side. Like a wave, I crash into your tide, till you're tired. Like a moth to a flame, that's how it is with you and I. Say to me, if you're the earth, then I'm your gravity, gravity. And I'm the oxygen that you need. And now I'm falling through the sky. Yeah, that's you and I. You know me well, know me well. You know that I can never leave your side, leave your side. Like a wave, I crash into your tide, till you're tired. Like a moth to a flame, that's how it is with you and I. Say to me, if you're the earth, then I'm your gravity, gravity. And I'm the oxygen that you need. And now I'm falling through the sky. Yeah, that's you and I.
Give me some peace of mind again, 'cause I've been walking up and floating off the edge.
Hey y'all, hang tight for just a minute. Let me get a few things pulled together. And just FYI for those jumping in, not doing a deep dive on a bunch of different stock charts. I say that, I'm not. Actually, we'll see where this goes. I'll be back in just a minute.
Why do we feed the fire when we can breathe the flame? So let me hold you till the end, 'cause I've been holding on to all the words that you said. And if I fall down, I get up again, 'cause I've been holding on to all the words that you said. All the words that you said.
Alright. Hey guys, it's Chase. Let's see, let's jump into some of these charts. I know some of y'all have been waiting, so gonna mainly look at crypto here. Might do a separate session later or tomorrow related to some actual stocks. Let me click this as well. Let me click over here in case somebody chats in the lounge. Yeah, Pine Warrior says I hear the same soundtrack. So Bitcoin's ripping. Shocker, right? So we complete this downside measured move here, perfectly tagging that support, and then ripped off of it. Have strong increasing volume here. So what's that mean? That means that this very large cup and handle setup that we've been monitoring for months is still very much intact, and now we have a fresh bull flag breakout going on. So measured move for this setup is looking somewhere in that 120k range. I would not be surprised at all with increased momentum to see us hit a new all-time high in the next couple of days. Not saying it's a definitive, but when you get the momentum push like this on a breakout, I mean, look, you can see it's actually trying to push up right now. That's huge buyer volume. So buyers have been lurking and waiting to do that. Bitcoin dominance over here, if we look back on the weekly, we haven't even hit full-blown alt season yet. So what I expect for alt season to occur is going to be something similar to what we saw back in 2022, where basically Bitcoin dominance pushes up and then you get a very sharp fall off. That's when alt season occurs, right in here. Notice how we never actually had that occur. Bitcoin dominance sustained and pushed up. Volume strong and everything else, so Bitcoin dominance is still there. My target for alt season was late Q2. We'll see if that happens or if we go more Q3, but even right now with Bitcoin and overall market sentiment on this push out, you're going to see altcoins and others move up. You can see here on the right, turn off extended hours because that doesn't really apply to crypto. But you can see over here on the right, everything's kind of ripping right now with Bitcoin, right? So even Ethereum and the crap project it is. For those of you that have been kind of following along, y'all know why I feel like that about Ethereum. But that being said, what we got over here on XRP, same thing. There's inverse head and shoulders here. I was watching for this downside break. That was a short-term trade. If anyone jumped in those leverage crypto futures alerts from over the weekend, especially if you went long-sided on the breakout, they are probably going nuts right about now, especially if you did so on either Solana or Bitcoin, because those two, you can go 100 to 200x if you wanted to. So I'm watching XRP to see if we get the upside breakout. We also have this downtrend line. It looks like we're probably going to blow right through that. But as of right now, still have the higher low going on there. This beautiful inverse head and shoulders. So look for upside break of that. You can also see we're bouncing off the 200 EMA there and trying to push above the 50 EMA. So XRP is looking good. Solana looking like. It's retesting 50 EMA and 200 EMA right now. Solana is one of my favorite projects heading into next year because this chart is beautiful. Plus, from altcoin standpoint, Solana is just a lot more appealing nowadays. Than a lot of the Ethereum stuff. And if we look at ETH, you can see, I mean, the chart's trying, and from a technical standpoint, Ethereum's still going to get some volatility and movement going on, but it just doesn't have the support of the miners like it used to ever since they went proof of stake instead of proof of work. So we'll see. From technicals, maybe it pushes, but I wouldn't anticipate Ethereum doing some massive run like you saw back in the last crypto cycle. Doge, several others kind of testing their 50 and 200 EMAs as well. XLM, definitely keep an eye on here because with Bitcoin popping off, what you're going to start to see, actually I kind of want to go over here and find me a leveraged future right now on XLM because it hasn't occurred yet and usually it leads ahead. So seeing this is interesting. What's probably going to happen is XLM is going to rip, similar to what we saw back in November and which you see in other times where Bitcoin is popping off. Reason being, XLM is one of the cheapest ways to transfer crypto from wallet to wallet on exchanges. So XLM is definitely going to get some love if we see a sustained breakout here. There is an inverse head and shoulders there. I'm not going to map it all out, but also this bull flag is definitely there on the weekly. Daily, yeah, the inverse head and shoulders is very clear on that. So watching that to see what happens. Yes, it does have a normal head and shoulders as well. But like I said, if we can push out here strongly, especially if Bitcoin rips up higher like this. And I am kind of sad. We're shifting over a little bit towards stocks right now. Hold on. Where you at, Hood? Yep, I should have bought more long calls today on Hood. I knew that was coming. I already told some of the people on Discord that I was having some FOMO over not buying more long calls on Hood today on the pullback. And if crypto's ripping, Hood's gonna rip. So you can see right here that Hood's probably gonna sustain that rip higher up. It's already filled the gap, which mark that. I was watching for that gap to fill to the downside, but with crypto popping off, it might not happen. So let's see real quick. I almost bought MicroStrategy calls earlier too, even though I normally refrain from them just because they're so expensive. But this inverse head and shoulders had me so tempted. And then here we are popping off after hours. So MSTY. And for those that are like, why is MSTY not moving as fast yet? For one, when it comes to crypto, and crypto tickers specifically, each of them gets their value different ways. So some of the crypto stocks are broker related, such as Coinbase. Some of the crypto stocks are miner related. So you've got things like Riot, CleanSpark, Mara that are all crypto mining stocks. Some of the others get their value through other avenues in the crypto realm. MSTY is obviously, as it says there, a yield max ETF based off of MicroStrategy, but it's not your direct yield max ratio like TSLL is for Tesla, where it's based off daily performance. Instead, the MSTY ETF is actually a combination of calls and puts for MSTR, as well as a few other security derivatives that are based within it to keep it a bit more stable. So that's why you're not seeing MSTY have some huge blowout to the upside with the movement that's going on with crypto. And that's why also, even though crypto's pushing up there into potential new all-time high territory, you aren't seeing just an immediate reaction over here on the crypto stocks and after hours. That's not to say it won't come in the coming days, but man, I'm glad we bought those Riot shares now, because this thing is going to keep popping off. And that was a beautiful entry on the inverse head and shoulders. I think it was actually Callie that might have called out asking me to look at Riot a few days ago, and it reminded me to enter more longs on it. So thank you for that. Let's see. Mara, same thing. Inverse head and shoulders, potentially breaking out, pushing above the 50 EMA and 200 EMA on the daily. So that's promising. Let's see what else we got. You know what? We got like 11 minutes or so until I will have to bail. So ticker requests are open. Sling them at me. Let's go. I'll pull the other ones and post them in the detailed TA in the analysis channel. If anyone wants them, put them in chart requests. But if there's anything anyone wants me to walk through live real quick, have at it. Throw it in the YouTube chat, throw it in the Discord chats, and I will take a look for you. And we'll look at it together. Morehead's already typing. I know that dude wants him some stock analysis. Let's go. Adam. Oh, he wants crypto. Oh, Stevie's gonna hit me with Lulu, even though it's already in the chart analysis chat. So, okay, that's fine. Here, let me look at Adam real quick for him. By the way, Clarity Morehead, Adam crypto, right? I'm assuming that's what you're talking about. Yeah, because you said staking. Absolutely, Adam crypto. Okay, I got it right here. So yeah, it's definitely still consolidating, and it's still got a bear flag there, but Adam's one of those that'll kind of chill, and then all of a sudden it will just massively rip like what we saw back in November. So not saying we see moves identical to what we saw in November, just saying keep an eye on a lot of these altcoin projects. I mean, hey, Rivian, I see ya. Rivian is all of a sudden deciding it's going to wake up. I mined a crapload of Rivian back in 2017 through 2020. So good to see it finally is choosing to wake up. I haven't kept up with the news related to it. I just leave what's out there sitting on the wallet. Let me look at Lulu real quick. Oh, no, Stevie, I didn't actually get a chance to do it yet in the analysis request channel. You're good. My bad. I'll still post the detailed TA for it over in the Lulu channel so that you have it and it's easy to reference and check back on. So let me look here. So like Lulu, as of right now, it looks dirty. I personally wouldn't want to long that yet. And even if it barely taps that support, I would look for confirmation of a reversal, which that's interesting. I haven't kept up with Lulu enough to know what's up with all this, but it looks like it's diving pretty hard even after good earnings. And here is a fantastic example for everyone of why good earnings don't mean stock goes to moon. So they barely beat on earnings, it looks like, but even then, this thing is diving hard. So that's a harsh drop. Or is it down since earnings? Yeah, over 20%. So, ouch. That's also why you don't trade options into earnings. Chat. CoreWeave. Hey, I was actually looking at CoreWeave earlier today. Can't spell. What's the ticker for it again? I'm going blank all of a sudden. Was it CoreWeave? Apparently I cannot type on this other keyboard is my issue. Yeah, so I pulled it up actually earlier today because I saw some interesting options flows on it. And I didn't even take the time to chart the thing because I looked at it and I was like, yeah, I'm not touching that. I mean, that's a huge parabolic move, but I personally don't chase stuff when it moves like that. And there's not really a historical reference for the range. For me, the risk to reward is just not there to pursue calls or shares on something like this because we don't know how harsh of a pullback it can have if it does. So it's a good one that I want to watch because I think it's got a lot of exposure within the options realm, and y'all know I love some options trading, so it's worth keeping an eye on. And if you want to throw it in the chart request channel for me, what I'll do is I will take and I'll actually create a channel for us to put the TA for it so that you can keep referencing back to it. So yeah, Cody, Hood. The reason why it moves in relation to crypto is because regardless of how a lot of people feel about it, even, I forget who it is, one of the guys in Discord, maybe it's Dude Where's My Lambo, which changed his name a few times now, but the reason why Hood moves like that with crypto is because regardless of how people feel about Robinhood in general, at the end of the day, it's so easy to use their app, and for a lot of retail traders and people in general, Coinbase and Robinhood are the two easiest things to purchase crypto on because they don't have to jump through hoops. They can use their credit or debit card or bank account and directly, throw money onto it and purchase with it. You do pay more fees for crypto purchased on either Robinhood or Coinbase as a result of the spread and their fees baked into that spread, as compared to if you were purchasing directly on a crypto exchange. So Kevin, actually, if you look for the Tim channel, there's a very detailed breakdown of Tim that I posted maybe an hour ago with all the TA levels for you if you want to check that out. I can show it as well here in a second, but kind of just circling back to Hood here. That's why you see a relationship between the movement of Robinhood and crypto, and that's why I've said, since we were way back over here in August, that Robinhood was going to continue to rip and sustain momentum as long as crypto was remaining bullish, which Bitcoin has maintained its bullish stance regardless of the short-term pullbacks all this time. So those pullbacks, like back in April on Hood, when I load up calls and we trimmed them, I wish I would have actually loaded up even more. I am still in a single runner on those June $55 calls, so they were deep enough in the money that I was like, you know what, I'm going to stay in them. So we'll see if this pushes out and up. I know some people were a little concerned about the lawsuit information or whatever that came in on Friday for Robinhood, but if we're being real, anyone that's followed Robinhood since GME, AMC days of 2020, 2021, that's nothing new. So that's not really the shakeup I think that's happening right now in Robinhood. It's doing a healthy retracement because if you look here, and we'll look at Palantir here in a minute, it's a healthy pullback and retracement after that run, similar to what we got right here. So everybody, like how many people have you seen go short on Palantir here on this run up, but this thing has maintained such strong momentum in a bullish stance all this time. And that is just a new bull flag or bullish pennant that we have formed and have now broken out of. This pullback here is a perfect example of us tagging that previous high, forming a new high, taking a cool off period, coming back to retest that pennant, and then bouncing strongly, very strongly, actually, with the move today. So I'm looking to see Palantir go to that measured movement range up in there. We'll see if it gets all the way there, but that's strong momentum. What we need to see is strong buying volume step in and sustain. If volume continues to taper off, I'll be a bit concerned, but I don't know that I can bring myself to sell covered calls on Palantir. It's just too strong. I don't want to give up my 1711 average. For those that are new, the average on these shares is somewhere way down here. So no, I don't want to mess up my average on that. I know it sounds silly, but not with it being like that. So I'll ride that out. TM though, just for those that didn't see it in the channel, I'll go ahead and click on it for you, Kevin, because I tried this earlier today. So it's got this nice inverse head and shoulders going on. We're right above the 50 and 200 EMA as well, so that's looking promising. I know this ticker can do some volatile stuff though, so take the technicals as they are and just keep that in mind. I want to see a strong breakout to the upside. That's good increasing on volume there, but also it's still kind of average volume range. So really I would like to see not just this increasing volume, but strong volume pushing to the upside. It does look like it's also in a technical downtrend on the weekly still. So it looks like if it pushes a little bit higher, maybe above that lower high right there. I don't know if y'all can see this or not when I'm doing the little cursor thing. You cannot, I confirm. So if we can form a higher high there, you could see it break out to the upside. Other tickers y'all want. Let's see. We did Lulu. We jump over here to the ticker request channel. Also, we can do the touch base real quick on some of those ones that we're currently trading. So, Etsy. No, I still haven't sold my runners. Should I? Maybe. It finally did fill that gap. I didn't even realize this had a new high today. I haven't updated my spreadsheet yet, but yeah, people have been watching this one because I'm in. Was it the $52 620 call? So they expire next week, but I cannot bring myself yet to sell the final 3 runners because I am very determined to see those things go over 2,000%. If we can break out to the upside here, then we're probably going to head to that 68, 63 gap fill on Etsy. We entered calls down here on them, and they just completely and totally ripped. And this thing blew through that downtrend line with strong volume. So Etsy, these are all really good examples of why you do not have to trade the big tech tickers nonstop and expect to make gains only on that. And to be honest with you, after doing this for years, most of the time you're going to see a lot of servers that they alert things like Tesla calls and Nvidia calls and other big tech calls just because that's what they know people want to see. But in reality, if someone's being honest with you, the risk to reward is not nearly as good on things like that. While you can make good gains, you're also paying a very high premium for options contracts on things like that may or may not yield 20% gains, and occasionally you'll see some huge breakout run on Tesla or something that you get over 100% gains on some of those options, but the risk to reward is just not there for me after doing this for a while, to where I don't even trade Tesla options as a buyer. I don't swing them hardly ever. Like occasionally I'll do 1 DTE or 0 DTE on Tesla. I've stuck with selling premiums on Tesla and it's been fantastic. So just throwing that out there because I think that there's a very common misconception that trading big tech tickers and calls on them is safer, but in reality, the premiums are stacked against you, especially as a retail trader, and they play into that heavily when they sell to open those call premiums on you. So Tesla, we had that news today, so I am watching Tesla here because while we have a big bullish engulfing candle in the daily here, notice how our volume still has not peaked high enough. This was institutional selling is how you get that huge of a drop. institutional buyers have not set back in yet. So even though Trump stated today, and for those of you that aren't aware, that's why this ripped, Trump stated that they're keeping Starlink and he's keeping the Tesla at the White House, but he basically has also confirmed that him and Elon aren't friends at the moment. So what am I watching here? I'm watching here to see if it can retake and hold over the 250 EMA. You can see we pushed over the 200. We're testing the 50 EMA right now. What we need to see is we need to see a strong push over this current level and range. And then we need to hold over that range with strong volume, and buyers need to push higher. Is the daily chart how you all the candle formation? So Cody, that is a good question and a bit more complicated than a direct answer that I wish I could give you. So when I'm charting, and I wish I had a good example today for the sake of time, because I don't have time, because my wife needs relief at this point from our 4 chaotic kids. For the sake of time, I'll give you the short answer here. Whenever we've got another ticker that I can go through from scratch, I will show you. I typically start with the weekly time frame, and then I'll work my way down, drawing my support and resistance lines along the way. So I'll go weekly, I'll go daily, 4 hour, 1 hour, 15 minute, 5 minute. And the legend for what I use for my lines is there in the description of this video. And I stay with that consistent legend regardless of whether I'm charting stocks, crypto, futures. Futures, it's 5:02 by the way. I need to go take the trade here in a minute. I need to pull my TA for futures for y'all here in a second and then post those trading plans. Sorry, I have not posted those yet, so I'll do that in a moment. But yeah, like that's how I approach it. And you can see on whether it's gold or crypto or any of the stuff that I've clicked on so far, like same legend across the board. If it's a thick yellow line, it's a strong level of support or a strong level of resistance from the daily or weekly time frames. Dotted yellow typically is either maybe a 1 hour time frame that doesn't have a lot of multiple hits across the time horizon, or it's intraday level. So like if I look at SPX, this looks chaotic as ever, right? But if anyone's been following me for a while, you can actually see here that everything here is actually really clear. And one, I know it doesn't seem realistic because you see tons of lines, especially those of you that are looking on your phone at this, but these dotted yellows that are in that trading range, that's minor levels of support and resistance. The reason why that matters is when you're scalping something like SPX options intraday, you need to know where it makes sense to take profit or to potentially enter a trade if you're on a rejection or a bounce at support. So for instance, earlier, a good place whenever we were in the 610 SPX puts, I sold mine just based off percentage gains when we tagged this first support range. But then this dive that happened afterwards, we head back into this zone here. So SPX isn't moving right now, by the way, on here, for those of you that are trying to look at that and see what's happening. But same thing over here on SPY. I saw the rejection at this purple gap fill level because gap fills typically end up serving as support or resistance levels historically. And when I saw that rejection happening on the 1 hour time frame, on the weekly time frame, 1 hour, 15 minute time frame now, and then 5 minute time frame as well, you can see we rejected at that level multiple times. We also formed a head and shoulders pattern and broke the neckline and then dove. So I'm going to delete that now because that's an intraday setup, and I'd like to clean them daily just so that we can actually see what's on the charts. But after hours, it looks like whatever news came in is pumping everything. Yeah, Palm Warrior. So like, here's my thing when it comes to crypto ETFs. I don't do them personally. MSTR and MSTY are a bit different because those aren't direct crypto ETFs per se, even though MicroStrategy most certainly does move with Bitcoin. For me, if I'm going to want exposure to invest into crypto anything, I'm going directly to crypto. There's multiple reasons on why I choose to do that. Primarily, for one, I love crypto, but also there's tax benefits or loopholes, I should say, to using crypto if I was to make significant gains as compared to securities like options on one of the Ethereum or Bitcoin ETFs like BITO, for instance, like BITO. So I get it. like the mainstream adoption type thing, but if you're willing to purchase and get exposure to Bitto or something else, unless you're like an IRA or a retirement account where you can't purchase. Pedo says Chase doesn't like crypto anything other than crypto, his old school crypto. You're damn right. I'm OG crypto. I'm like 2017 crypto over here, HODL gang. So yeah, for me, like, I prefer real crypto for the reasons I mentioned, but also I truly believe in blockchain technology in the future. So big fan of normal crypto rather than messing with options on other stuff. Celsius, and then I'm going to have to wrap up here in a second. So Celsius is on a clean breakout right here. It looks like it's strong volume breaking out the inverse head and shoulders. That note there for people that were following along while I wasn't on voice the other day, we're looking for sustained volume increase with breakout confirmation, right? So you can see here when we broke out to the upside, volume sustained a bit higher. So ideally I'd like to get some of the super strong volume, but you can see we're still increasing volume with the breakout. So that is good. Also saw some good, interesting options on Celsius earlier today on the flows, so that is a good sign. What else we got over here? Leverage crypto. Yeah, so that's one thing I didn't mention a moment ago when I was talking crypto and got all hyped. If I'm going to actively trade crypto, because when I talk buying actual physical crypto, that's more so for cold storage, long-term holding is how I do that. If I'm wanting to actively trade crypto, I don't do that using normal crypto just because like the percentage increases that I would need to see to make sense aren't really justified per se. What I will use is leverage crypto futures on platforms like LBank. I used to use several other crypto platforms to do that, but they got a bit harder to get around VPNs and stuff. So Kraken, LBank are some of the common ones that you can kind of get in. You might have to use a VPN if you're using Kraken. Yeah, I'll look at Rivian for you, Chapito. Analyzer / Chapito for those that aren't aware. That's who. So yeah, like I use crypto leverage futures because I can take and get in like a 50x position or something, or a 100x position on something if I want to benefit from a short-term move on crypto, or even a shorter to mid-term swing trade. Y'all seen Tia trade those quite a bit. She'll enter something and ride it for, 1,000% gains or something ridiculous. But Rivian. So Rivian's one of my favorite longs. Lead off by saying that. Also seeing a lot more Rivian cars, trucks, SUVs and stuff around here lately. But Rivian, I'm digging this test and push up higher. So what I want to see is strong increasing volume. I know, I'm trying to type on two different computers at one time. I know some of y'all are like, oh no, Rivian's moving so slow, but Rivian's one of those that'll be chill and then all of a sudden it rips. And this looks like a little rip, but that little $2 move, or I guess it was $3 or $4, but that little movement range there offered significant gains on some calls last month. And this is another good example of what I'm talking about when I say risk to reward, making more sense on some stuff like this. Because you can purchase an option for this for probably like $100 to $200 for reasonable strike, far enough out expiration. Whereas to do something similar on Nvidia, Tesla, even Apple, you're going to pay a much larger premium, and your net percentage gain movement on the trade is going to be far less than if one of these rips even higher. So I'm a big fan of trading mid-size stocks, even though a lot of these have huge growth potential. On the topic of EV and stuff, also saw a Lucid this weekend at the Dallas Zoo when we were there Saturday morning, just like personal vehicle. So seeing more and more Lucid vehicles lately as well. For those that often ask, like, is Lucid going to be the next Tesla? No, and they don't want to be. So that's kind of the difference. Two is that they have a different target market and they have no interest in putting out a cheaper model that appeals to the masses, but rather they will grow and scale their value and their revenue streams through other markets. Plus the Saudi PIF owns like some absurd amount. Like here, we'll look real quick. so y'all can see what the heck I'm talking about. If we look at Lucid, Saudi Public Investment Fund owns 58% of the outstanding shares of Lucid. So what that means is that when you get some kind of decent buying volume that comes in, whether it's news or random new buyers or whatever it may be, what happens is Lucid will be chilling, all of a sudden it makes some massive upside move as a result of that. So like there was a few days back in, what month was that? I guess in December, and then we did again in February, but we saw huge percentage gain moves in a matter of 2 to 3 days. So that was 30%. And then over here, between the end of December and the 6th of January, 72% move. So that doesn't seem like a lot, but you're talking about a stock also that's substantially cheaper. So let's say if you threw, I don't know, this could be a really high number for some of y'all, and I get that, but if you threw like $5,000 into this, $5,000 sustained and increasing over that compared to some other stuff is going to be a lot different than you throwing $5,000 into Nvidia or something else and maybe securing like 10 to 15% gains. And honestly, for $5,000, you can get 10 to 15% gain selling premiums on something instead of sitting in something else. But not knocking big tech. I own shares on a lot of big tech, especially y'all know where I stand on Tesla. So just throwing that out there because there's a lot better ways for people that are trying to scale and grow their accounts to do so without as much risk involved on swing options on big tech. Let me pull the chat back up over here on this other computer real quick and see if there's any last minute requests I need to knock out. But then I've got to bail. I will post up the futures trading plans for everybody so that y'all have those before I leave. Alright, reading through the chat to make sure I'm not missing anybody's stuff. UPST, you got it, man. The Upstart's another one we're in calls in right now. That's beautiful inverse head and shoulders breakout there with volume ramping to the upside, right? So we're in breakout territory now, well above the neckline, pushing up. We're above 200 EMA, 50 EMA. Volume's looking good. Ideally, we can get some of this kind of volume like we had, but that was earnings volume. So it looks like we're actually just now starting to get into stronger volume territory. If we can get a really strong volume push here, we can easily go 57 to 64 fast. So I'm down for that, or even better, one of these moves like we hit with earnings. So I'm in my calls right now on this one. They're July 18th, it looks like is what most of them are. So Steve's wanting to know what's up on SoFi. Yep. SoFi is still chilling in the same bullish setup. I know some people went ahead and locked gains on their calls last week because they entered on the re-entry alerts, but like I don't get bothered from this, and I think it just comes from different trading styles. And like I mentioned in the chats the other day, it's always interesting to hear from people because you got the same people that have no problem with throwing like $1,000 on a 0 day to expiration XPX trade for a single contract, but then the same people will be way stressed out over $500 sitting in some calls that are like 7 months out on something like SoFi that actually still maintain a very bullish stance, and it's moving like 10 to 20% over a week or two. So just throwing it out there, it takes a lot different trading mentality to be chill in swing trades, but also swing trades are some of the most consistently gaining trades that you're going to take on some of these mid-sized trades, because my approach on that is buy a number of contracts. If I have room to add to that position over time, like if something takes longer to consolidate pullback like it did with SoFi, I'll add to it as long as the setup remains, which is great. Sometimes things pop off before I even get a chance to add a second phase in my trades, and that's okay too. You have to learn to be okay with that. You're not going to get the full amount of contracts you want for every single trade without putting yourself at too much risk. So, I mean, Etsy's a good example of that. Hood was a good example of that. Applied Digital popped off as well. Luckily, I entered more than one types of contract on that. But QPTS was another one that I only had 5 contracts of each of those calls I was in, but then they ripped before I even got a chance to add a second phase. And what I do is I trim off a portion of the contracts once I'm at one of the key resistance levels if I'm on calls. And keeping in mind what we've all talked about in the Discord chat several times now, that it's a bit different of writing something to trim later on based off a setup. If you're writing, 5 or 10 contracts on an account or a portfolio where those contracts represent less than 1% of the overall value, as compared to if you're learning and you're trying to get used to trading options more so, or if those options represent a much larger portion of your portfolio, then you need to be much more cautious and conservative in locking gains, meaning that something pops up 20-30%, you set the stop loss, and if it triggers for 10 or 15% gains, so be it. That's still great gains to consistently have when trading anything. So definitely want to call that out for everyone, just because I know some of y'all will see me sitting in runners on a contract on something like Etsy that's currently up 1,725%, or Hood and other stuff that's up 800%. Keep in mind, I'm not sitting in the full position. I've already covered my cost basis. I'm riding runners at this point. And it's a lot easier to not have FOMO and let emotions trigger you into selling something once you've covered your cost basis and you're riding the position. So just calling it out there because very different types of setup. Yeah, I'll look at Clean Spark real quick, and then I probably do need to wrap up. But at the request of several people, I'm going to start doing these more often. Probably won't be tomorrow because some of y'all know I've got to go to the WeWork tomorrow to meet up with some employees that are flying in from out of town. But we'll start doing more of these trade recaps. And when I go through these too, like if anyone wants to see me cover specific trading topics, tell me. I may not make specific videos per topic, but what I will try to do is as I'm going through and doing trade recap like this or chart requests, what I'll do is I'll make it a point to try to cover some of those topics within this. Stevie, I got your covered calls on my list of something to look at a few different ones. Actually, Stevie, what's one of the tickers you want me to look at? Like, throw me a ticker. Or I guess I could go look at the chat too. There you go. RGTI. Yeah, I'm still in my RGTI because I didn't follow my own rules on that one. And I rode green to red. But that being said, I'm also not super worried about that right here because we're consolidating across that range and we're still above the 250 EMA. So, I'm going to look real quick. I want to look at one example of the other tickers that you were asking about. So BlackBerry's probably one that has enough space on it. Now, I will say, when it comes to BlackBerry, premiums aren't going to be huge because it's such a cheap stock. However, that being said, it would be a good place to practice covered calls as well. So when I'm selling covered calls, and y'all have seen how I do with Tesla, but I think that overwhelms people trying to wrap their head around Tesla in general. Whenever you're selling covered calls, you obviously don't want to sell covered calls on a big red day. I think that's a common mistake people make as they panic because something's pulling back and they sell covered calls. All of a sudden something bounces and they're like, oh crap, I'm negative on my covered calls and now I'm going to get assigned and have to sell my shares for a lot cheaper than I want to. There are some best practices we can take. Maybe this does make sense to make its own separate video for you, but I'd say when it comes to covered calls, while there's some best practices that are defined in some of those learning topics, there's not going to be a perfect situation that protects you from never being assigned on your calls. Now, you can choose to roll out those calls. Let's say if you sold NVIDIA calls, and this chart's going to be a bit funky, so let me do this. Let's say you sold some NVIDIA 140. Actually, I'm going to use 140. You sold some NVIDIA 140 covered calls. Ideally not on a big red day, which right now is not a big red day, but it's not ideal either for you as a option seller to sell calls here. You sell them for a 140 strike. Now you're selling where ideally, at least it's one approach and strategy. It's what I do is I sell them for a strike that either is in the money already. If it's something that I'm holding long term, I'm just trying to generate passive income like what I've talked about with Tesla. A safer approach for something would be like if you are in BlackBerry, for instance. Let's do BlackBerry because that one you have. Let's just jump back here. Let's say if I'm in BlackBerry at $4 a share. just to keep things very, very simple from a number standpoint. Currently, the simple way to make sure that you take a net positive gain on your shares would be to sell at a strike higher than what your average cost per share is. So the further you go out of the money, the less premium you're going to get. That's kind of the drawback that comes into play with that. You also have to decide whether or not your approach on selling calls, and it can vary depending on what ticker you're trading and what your approach is, but you have to decide on whether or not your approach is to simply hedge for downside risk in case the stock pulls back and you don't want to lose value that you've gained on your shares. Or another situation might be that you're using a stock to generate passive income and you're trying to collect as much premiums as possible while doing so. If you don't care about getting assigned on it, you can actually sell for premiums that are either further in the money or maybe at higher risk of getting assigned. And let's say worst case scenario that you sold a covered call for $4 a share and your cost basis was $3 a share, you still made $1 a share. So you're still going to make gains there. You get to keep the premium no matter what when you sell to open that premium for a covered call. So it's kind of a trade-off, and there is some risk of getting assigned there, but also selling premiums is a lot less risk than purely trading options as a buyer. Flip side would be selling cash secured puts as compared to covered calls. So cash secured puts, your funds to buy 100 shares are what gets held as collateral since you don't technically own the shares yet. So if I sold which I would never sell a cash secured put on BlackBerry probably anyways, but if I sold one, and I definitely wouldn't sell to open a cash secured put when something was this green, but what's one of those tickers that just took a big nosedive? Like, you know what? Hood would have been a good one that, had I wanted to, that could have been another way. So when Hood dove and opened way lower this morning, if I wanted, let's say if I wanted to buy another 100 shares of Hood at $69, yeah, I just did that. Didn't mean to do that, but I did that. Then I could have sold a cash secured put with a $69 strike this morning, and I would have immediately got the premium for that. What that means is then if all of a sudden we dropped down and we were at $50 a share at the expiration date, then I would be on the hook for buying my $6,900 worth, because 69 times 100 shares per contract. I would be on the hook for purchasing those 100 shares for $69 a share, even if the current trading price is $50. So, I think instead of continuing to confuse y'all without some structure, let me put together a script and a talking point to walk through covered calls a bit more practically. I know I've got those guides out there, so y'all definitely use those guides because there's so much good info there, and you can kind of step by step through it without having to jump through the audio too. But let me put together some stuff to kind of talk through selling premiums a bit more, because I think that is a great thing for a lot of you to do, especially those of you that have the capital to do it. I can tell you that selling premiums, being cash secured puts, and also covered calls, which are the two most common that you're going to run into, those helped me become a much better trader of options on the buyer side, because I started to better understand how premiums were impacted by different market movement and basically the exact times. Let's say that there's some types of options that you keep on getting burned on. Those probably are good candidates to look at how you're currently getting burned, and maybe you should be selling premiums in that situation instead, because obviously it's working against you as a retail trader and it's probably working against others. So on that note, I think I covered most of the ones here. If there's any other tickers y'all want me to cover, throw it in the ticker request channel for me, and I will make sure and I'll actually pull detailed TA for y'all. But I gotta wrap up and go rescue my wife. So everyone have a great evening. Good luck tomorrow. If you need anything, reach out to me. I'm always happy to help. Thanks all.